the 23rd, we got a whole bunch of PMI data coming through, and we actually got some misses, okay? Especially out of the UK, the Eurozone, the United States. So we're starting to see some contraction, right? Some contraction. So what does it all mean, right? We come over to trading economics. We see front page U.S. private sector nearly stagnates. So it came down to 50.4 in August. Shorter market expectations of 52. So still above 50 slightly. And we see Eurozone output shrinks most in 3 years. UK private sector output falls most in 2.5 years. So let's take a look at what it means. We're going to do our best to start really breaking this down for you guys so you have more confidence in the data that you're seeing, and then trade it accordingly, right? We're going to go to this UK private sector, right? Let's break it down. Like I said, as often as we can, we're going to make sure we get these broken down for you. So because we know those of you who have been with us for a while, it's reciprocal, right? They constantly track the data on a monthly basis, right? So what does it all mean? How can we use it to help us with our trading? So UK private sector output falls the most in 2.5 years. That was the title of the article for Trading Economics. So UK PMI report and its effect on the British pound, right? What does it all mean? So UK private sector output is the total amount of goods and services produced by businesses in the UK that aren't owned by the government, right? So there you get private sector, okay? Think of it like everything made and sold by shops, factories, and companies that aren't part of the government. Everybody understand that? Easy peasy, right? Yep. All right, easy enough. So the PMI value, August 2023, came in 47.9 from 50.8 in July. So it is below the expected market consensus of 50.3. So it missed target. So just breaking down the notes, right? Because we know when we read the articles, it can get kind of wordy. So what does it all mean? Okay, business activity, deepest contraction in private sector since January 2021. Service sector took a hard hit, contracting significantly. Manufacturing decline accelerated, making it 6 consecutive months of contraction. Order and backlogs. New business inflow saw its biggest drop since November of 2022. Work backlogs decreased at the fastest rate since 2020. Right? Again, so just breaking down the article. Employment, private sector employment increased, but only slightly. The weakest growth since March. Pricing, cost increases slowed down, showing the slowest rate since February 2021. The inflation of prices charged eased, reaching 2.5-year low. All right, that's decent. Business confidence about growth in the upcoming year dropped to its lowest since December 2022. So the overall impact on the pound, PMI reading below 50 suggests contraction in business activity, which is a negative economic indicator. Ongoing declines in various sectors can dampen investor confidence in the pound. A weakened economy outlook coupled with contracting sectors can lead to a weaker British pound. So in short, the drop in the PMI indicates contraction in the UK's economy, which may put downward pressure on the pound. So in essence, the falling PMI indicates economic headwinds, which can affect both the pound strength and the Bank of England's policy decision. All right, simple enough.